How to start trading cryptocurrencies. Cryptocurrency is a form of digital money that operates without the need for a central bank. Unlike traditional currencies such as the US dollar or euro, cryptocurrencies are decentralized. This means no single government or financial institution controls them. These digital currencies are powered by blockchain technology, a public ledger that records every transaction across a distributed network of computers. Every time someone sends or receives cryptocurrency, that action is logged on the blockchain. This system reduces fraud, increases transparency, and allows peer-to-peer transactions without middlemen. Bitcoin was the first cryptocurrency, introduced in 2009. Since then, thousands of others have followed, including Ethereum, Litecoin, and Solana. Each has unique features and uses. Some focus on payments, while others are designed for building apps, games, and decentralized finance platforms. Cryptocurrencies are typically stored in digital wallets and traded on online exchanges. While their value can be volatile, they offer potential for profit, especially in fast-moving markets. However, this also comes with higher risk. Understanding what cryptocurrency is and how it fits into today's financial system is the first step for anyone looking to trade or invest in it. Once you grasp the basics, you can move on to tools, platforms, and trading strategies. Cryptocurrencies rely on blockchain technology. A blockchain is like a digital ledger, but instead of one person or company keeping the books, the record is shared across thousands of computers globally. Each block in the chain contains a set of transactions. When someone sends cryptocurrency, the transaction is verified by network participants, called nodes or miners. Once verified, the transaction is added to a block and becomes part of the permanent chain. This system is secure because changing a record on one computer would require altering the same record on thousands of others simultaneously. The decentralized nature of blockchain also makes it highly resistant to censorship and tampering. Many cryptocurrencies use a method called proof of work or proof of stake to validate transactions. These are just systems for making sure everyone agrees on what's in the blockchain. Cryptocurrency wallets store your digital assets using encrypted keys. These keys are what you use to send and receive coins. The wallet doesn't actually hold coins like a physical wallet, it just gives you access to your holdings on the blockchain. Exchanges act like online marketplaces where people buy and sell cryptocurrencies. The prices fluctuate based on supply, demand, and market sentiment. Cryptocurrency offers an alternative to traditional banking. It allows people to store, send, and receive money without using a bank account. This is especially useful in countries with limited access to financial services. It also supports fast, low-cost international transfers. Instead of waiting days and paying high fees for cross-border payments, users can send crypto instantly for a fraction of the cost. Another reason it matters is control. With cryptocurrency, users fully own their assets. There are no intermediaries or restrictions from banks or governments. This appeals to people who value financial privacy and independence. Crypto is also the backbone of innovations like decentralized finance, DeFi for short, non-fungible tokens, NFTs, and blockchain-based apps. These tools are changing industries such as finance, gaming, and real estate. Because of its potential to reshape how we handle money and information, cryptocurrency is seen as a key part of the digital future. Even large institutions and governments are exploring how to integrate it. Still, it's important to understand the risks. Prices can be highly volatile, and scams do exist. Beginners should always research before investing and use only secure platforms. Just a quick reminder to please hit the like button and subscribe to the channel. Also, you can visit us on the web at investmentees.com and use the code BLOG to receive 25% off your next purchase. Getting started with cryptocurrency trading. The good news is that it doesn't require a financial background, but it does require planning. You'll need the right tools, a solid understanding of the market, and a strategy for managing risk. Step 1. Choose a reliable crypto exchange. A crypto exchange is where you buy and sell coins. For beginners, it's best to use centralized exchanges like Coinbase, Binance, or Kraken. These platforms offer user-friendly interfaces, solid security, and access to multiple cryptocurrencies. Before choosing, compare fees, supported coins, security features, and customer support. Make sure the platform follows regulatory guidelines in your country. Avoid unknown or unlicensed platforms that may not offer adequate protections. Look for features like two-factor authentication and withdrawal whitelist settings. These add an extra layer of security to your account. Step 2. Set up a secure crypto wallet. Once you buy cryptocurrency, you need a place to store it. This is where crypto wallets come in. There are two main types: hot wallets and cold wallets. Hot wallets are connected to the internet, like mobile apps or web extensions, while cold wallets are offline devices like USB drives that store your crypto securely. For small amounts or regular trading, a hot wallet is convenient. For larger holdings, use a cold wallet for added protection against hacks. Never share your private key or recovery phrase with anyone. Losing this information could result in losing access to your funds permanently. Step 3. Understand market basics. Crypto markets operate 24/7, unlike traditional stock markets. Prices can change rapidly due to news, social media, and global trends. Basic market concepts include market orders, buys or sells at the current price. Limit orders, sets a specific price at which to buy or sell. Liquidity, how easily you can buy, sell an asset without affecting its price. Watch price charts to identify trends, but don't rely solely on gut feelings. Learn how technical indicators like moving averages or RSI work. They help you spot entry and exit points. Also, stay updated on macro events and project-specific developments. Both can affect coin prices significantly. Step 4. Choose a trading strategy. You don't need to trade daily. Some strategies suit beginners better than others. Buy and hold. Buy coins and hold them long-term, ignoring short-term price swings. Swing trading. Take advantage of price changes over days or weeks. Day trading. Make frequent trades within a day, not recommended for beginners due to higher risk. Dollar cost averaging. Invest small amounts regularly, regardless of market price. Pick a strategy that fits your time, risk tolerance, and goals. Start with small amounts until you gain experience and confidence. Common mistakes to avoid as a new trader. New traders often fall into avoidable traps. One major mistake is investing more than you can afford to lose. Crypto is volatile, and prices can drop quickly. Always use money you're prepared to risk. Another issue is panic selling. When prices drop, it's easy to let fear take over. But emotional decisions often lead to losses. Chasing hype is risky too. Just because a coin is trending doesn't mean it's a good investment. Always research before buying anything. Ignoring security is another big problem. Don't leave large amounts on exchanges. Use strong passwords, two-factor authentication, and secure wallets. Finally, avoid overtrading. Trying to time every price movement is exhausting and rarely profitable for beginners. Focus on learning, not just earning. Keeping your crypto safe. Hackers love crypto because once it's gone, it's gone. There's no "forgot password" button in blockchain. That's why security is non-negotiable. Enable two-factor authentication on your accounts, use strong passwords, and consider a cold wallet if you're holding large amounts. And whatever you do, don't share your private keys. Doing your homework. Research is everything. In the crypto world, there's a saying: do your own research, and it's not just a suggestion, it's a survival strategy. Before you buy any coin, look into what it is, who's behind it, its roadmap, and community support. Don't fall for hype or flashy YouTube videos. If something sounds too good to be true, it probably is. Conclusion. Cryptocurrency can offer exciting opportunities, but it's not a guaranteed path to riches. Understanding the basics, starting with safe practices, and focusing on education will help you make smart decisions. Begin with a trusted exchange, secure your assets with the right wallet, and pick a strategy that matches your risk level. Most importantly, stay informed and avoid rushing into trades. With a clear plan and ongoing learning, cryptocurrency trading can be a rewarding journey, even for beginners. Thank you for watching.